Let's go over how to stop overtrading. There are multiple different reasons why people overtrade. I've only listed out 6 here, but we're going to go through all of these. And if there are other reasons, then I can bet you that they're going to at least fall into one of these 6 reasons here. So let's go ahead and start off with the impatient trader. What does an impatient trader really do? They're always micromanaging their trades. They're always watching the market at any time of the day, whether it's Asian session, London session, whether it's New York session, in the middle of any session, over the weekend. They're jumping onto crypto, they're jumping onto other assets that they normally don't trade, and they're just watching the market and they just want to be part of the market anytime there's any sort of movement. And they're matching their trades or they're entering their trades without any sort of confirmation. You just see like a 20-30 pip move and you think now there's a lot of volume kicking in, let me go ahead and jump into a trade, right? And then as soon as price starts creating a top wick or a bottom wick rejection on a new candle, you're closing out your trades, price hasn't even hit your one-to-one, you have no rules in place to scale in or scale out. Instead of micromanaging your trade, you should be focusing on macro management. What this essentially means is pick a session and only trade during that time and only trade during that session. So either pick an Asian session, pick London session, pick New York session, pick a session and only trade during that time. And that's the same time that you're going to come back every day or maybe 2 to 3 times a week, depending on whether you're scalping, whether you're day trading, whether you're swing trading, but you're only going to be trading during that one time. That's the only time that you're going to be entering any sort of trades after doing an entire top-down analysis. So from a technical perspective, take a look at those higher time frames, look at the monthly time frame, look at the weekly time frame, look at the daily time frame. A lot of the times when people are scalping, they're only paying attention to the 4-hour time frame and down, right? Maybe even dropping down to the 1-minute time frame or the 5-minute time frame. But what they don't realize is that price could be coming close to a monthly level or a weekly level or a daily level. And that's when price, starts doing consolidation, it starts doing fake outs, but you weren't aware of it because you never took a look at those higher time frames. And that's why it's so important to do a top-down analysis. Look at the monthly time frame, look at the weekly time frame, look at the daily time frame, because those levels are much stronger than your 15-minute, 5-minute, 1-minute. Your 15-minute, 5-minute, 1-minute time frames, your 30-minute time frames do not have enough volume to continue breaking past these levels until there is a confirmation from a technical perspective and from a fundamental perspective. So what do I mean by that? From a technical perspective, you need to see those break and retests. You need to see those retracements. You need to see price retracing in some way to correct the massive movements that have already happened or collect more liquidity prior to continuing back up, right? Or continuing back down, depending on the trend. You need to have set rules for your scaling in and your scaling out. Maybe I'm going to scale in only after I've taken a 1-to-1 partial on my first trade, and then I'm going to go ahead and scale in once I have the 4-hour, 1-hour daily in my direction, right? And then I'm going to go ahead and take a buy opportunity or a sell opportunity. I'm going to scale in, right? I'm scaling out only at 1-to-1. I'm scaling out at only 2-to-1, and I'm not going to scale out anything before that. If price pulls back before price even hits your 1-to-1 ratio, then you know that there was something wrong there. There was something wrong with the analysis. Maybe you didn't look at the fundamental analysis. Maybe you didn't realize that this was going to be a New York Stock Exchange open, and usually you get a lot of volume around that time, right? So you need to set these rules so then you're able to identify where are the gaps that you need to fill in when the trade is not going in your direction. Not having a trading strategy or having an outdated strategy. So what do I essentially mean by that? If you don't have a trading plan and you've never done any pre-trade analysis, you don't have any rules or guidelines, and you're switching up strategies every month, you're not going to last very long in this market or in this industry in general, in Forex or trading stocks or trading crypto, whatever it may be. You're not going to last a very long time. Trading strategy is going to evolve depending on your style of trading and also what pair that you're trading, what asset are you trading. So if you're trading, let's say GJ, for example, your trading strategy is going to look a little bit different than someone who's probably trading US 30. And that's because in that trading strategy, in that trading plan, there's going to be risk management. There's going to be, where your strategy is to enter. Maybe someone only enters impulse entries versus a break and retest or a retracement, continue with the trend, counter trend, whatever it may be. There are different strategies out there that people are going to trade. But you need to be updating your trading strategy depending on what's your style of trading. So some people, they're only going to be scalping, so their trading strategy is going to look different from someone who's going to be day trading or someone who's going to be swing trading or someone who's going to be position trading. If you're someone who's trying to scalp and then eventually hold out your trades to become a swing trade, then your trading strategy is going to look a little bit different. Now, instead of just focusing on the 4-hour, 1-hour, 30-minute, 15-minute, 5-minute, 1-minute time frames, you are obviously going to be looking at the higher time frames. You are obviously going to be looking at the daily, weekly, and monthly, because those time frames will give you the understanding of where's price headed, what's the direction like of this trend, and are you taking a counter trend trade, and what's the limitation of your trade there, or are you actually going with the trend? If you don't have a trading strategy or you don't have a trading plan, you don't do any pre-trade analysis before hopping into a trade, you don't have any rules or guidelines or switching up strategies every single month, then you are going to end up, losing a lot of your money. You are going to be part of that 90% of those traders who do end up losing in this market. So what you need to do instead is have a rule-based trading strategy. So not just any trading strategy, but you need to have specific rules. So think about like a checklist. Start off, if you've never done like a trading plan, start off with a quarterly trading plan, right? So in the first quarter, what's your trading plan going to look like? And this can vary depending on your goals as well. So if you're someone who's just starting off into the markets, then obviously start off with, for example, the first quarter, I'm only going to focus on having my education. I'm going to try to develop some sort of a trading strategy. I'm going to look at the different traders and I'm going to try to build something that's my own. Second quarter, you're going to start moving into more of the demo side. So now that you have practiced your trading strategy, you've developed your trading strategy, now what you want to do is refine that trading strategy. So developing and refining are two different things. What you want to do is now try to find what are gaps in this trading strategy that you need to fill before you go and trade with a live account. Third quarter, let's say you open up a small account and you start trading a little bit just to get an understanding of, what's the real live market like. Obviously, the emotions are going to be very different from someone who's only demo trading to someone who has been live trading, right? Because now the emotions start to kick in a lot more. Now you have actual money that's on the line, right? So getting used to that. And then fourth quarter, that's when your trading strategy is going to evolve there as well. Maybe you're going to come up with some rules. Now you figured out where are the gaps and how to fill them. And the next thing that you're going to do is look at a minimized watch list. Don't have 4, 5, 6, 7, 8, 9, 10 pairs on your watch list. Have 2 to 3 pairs that you're looking at. And obviously over time you can add to that. So some pairs would be something that you're only scalping. Some pairs might be something that you're, swing trading in the background. So you could have multiple different pairs, but if you're starting off or if you're someone who's struggling with over trading, minimize your watch list. Go back down to about 2 to 3 pairs that you're going to focus on. You need to be journaling and reviewing your trades. You need to be reviewing your performance, right? And that's how you're going to figure out where are these gaps that you need to fill. So a lot of times when people are trading and they're not journaling, they're not reviewing their performance, they're going to think, things about the market's out there to get me, or, there's something wrong with my strategy. I need to add another indicator. I need to add, some other supplemental information here that you have no idea about. Right. And that's why you need to be journaling and reviewing your trade, because 100% of the time, if you go back and look at your trade and you start looking at, what did I miss? So from a fundamental perspective, maybe a high impact news came out. Maybe there was a speech. Maybe there was a war that happened. Right. Maybe there was like some geopolitical tensions that happened, something from a fundamental perspective. Or again, coming back to what I was talking about earlier, where you don't do a top-down analysis and price probably tapped into like a monthly resistance or a monthly support or a weekly resistance or a weekly support, and you didn't realize that that was a higher time frame level and price bounced off of that. So that's why journaling and reviewing your trades is very important. Have detailed rules and guidelines. Have like a checklist. Maybe there's like 1 or 2 things after every single component of your trading plan. So what's your pair like, right? Which pairs are you going to be trading? GJ, gold, US 30, right? It could be 3 pairs, or it could just be, GJ and gold, or it could be like, any other pairs that you're trading. Then what session are you trading? New York session? Okay, now put down the exact timing of that New York session. Right? So put down that maybe at 5 a.m. PST, which is 8 a.m. Eastern time, that's when New York session opens up. So I'm going to trade from there up until, let's say, 30 minutes into New York Stock Exchange open. The next thing that you're going to have is what's my risk like? So break down your risk. So maybe 1% risk is for when a new quarter opens up or a new month opens up, right? Or I'm towards the end of the year, or I'm in the beginning of the year. And then 2% is maybe somewhere in the middle of the month or somewhere in the middle of the quarter, right? So 2% is the average that you're going to be risking. And then the next thing that you're going to have is conditions. So what are the conditions of my trading? I'm only allowed to have 2 attempts per day, and you're going to stick to those 2 attempts no matter what, right? So even if you've taken a first attempt and it ended up being a loss, you have 1 more attempt, but that's your final attempt for that day. And you have to be disciplined to stick to that. And then the next thing that you're going to have is, what's my strategy like? So am I doing a break and retest? Am I doing an impulse entry? Am I going to do a counter trend? What is my strategy going to look like? Am I scalping? Am I swing trading? So these are going to be your checklist essentially. So when you open up your trading plan or your trading strategy document and right before you're trading, then it's a checklist. You just look over, are these things working out for me right now? Are these things happening in the markets right now? And can I take a trade? Revenge trading. So a lot of people, they start to get into this mindset of, I need to offset my losses. I need to make back my losses, right? You start moving into frustration and anger into the markets because now you're willing to take any trades at all. So now you're prioritizing any and all trades over your trading strategy. You have poor risk management. So let's say the first trade that you took was probably within your trading plan. It was a loss. Now you have a second attempt, and maybe that was a loss as well. Now you start jumping to your third, fourth, fifth, sixth trade, and now you don't even care about the lot sizes that you're using anymore, right? Or the fact that you've already over leveraged, or the fact that you're already over trading, and now you look at your account at the end of the day and you've gone from like $1,000 account to like a $50 account, right? That's poor risk management, and that's all your frustration, emotional trading that's kicking in. What you need to do is come back to your basics. You can never make back losses. The money that you have already lost, it's already gone, right? Now it's up to you to take a look at, why did that loss happen? And did you miss out on a level? Did you miss out on some fundamentals? Is this just consolidation? Is this a no trade day? Coming back to these basics and understanding what is essentially going on, right? You need to be approaching the markets with an analytical mindset. So you need to be looking at the fact that financial markets are all about data. Every time price is ticking, every time price is making a top wick, bottom wick, closing at certain levels, that is all data. You are not going to be analyzing data with your emotions. You're not going to be using data and then making decisions based off of your emotions. What do you do with data? You analyze it. You take a look at, what is this data telling me? And then how do I need to make my decisions based off of this? So let's say, for example, price is consolidating at like a very strong support area. From a data perspective, if price is consolidating, it makes sense to not enter a trade. Price is not going anywhere. Right now, from an analytical approach, I need to look at some of the higher time frames. Where does it make sense for price to break out of certain levels? And then where does it make sense for me to take my entry? Think about it from an analytical approach instead of an emotional trading approach. The market does not care about your emotions. The market doesn't care that you've already lost so much money. So that's why, instead of putting your emotions in front of everything else, you need to be using an analytical approach. You need to be using your trading strategy and put your trading strategy above everything else, above, whatever anyone is saying in their YouTube live stream, Twitter, what anyone might be saying on Instagram. It doesn't matter, right? Getting out of that herd mentality, right? Focus on your trading strategy, because hopefully this is something that you have practiced over and over and over again and really refined it down. If the first time you had a loss, second time go in with a lower risk, right? If the first time you went in with a 2% risk, maybe this time go in with a 1% risk and let price pretty much run, right? You need to check your fundamentals. You need to check those higher time frames. There's a possibility that maybe you missed out on a specific level on a higher time frame, right? Or maybe there was specific data that was coming out and you didn't realize that that news was coming out that day during your trading session. So checking that out. This is more of the new trader syndrome that I was talking about, where people think that I have to trade every day in order to be successful. I have to trade every day to have massive equity gains. That's not true, right? And these people, they tend to have a lack of education. This is a new trader who just saw, a bunch of stuff on, let's say, social media, and now they're just trying to give, financial markets a try, but they haven't educated themselves at all. Right? They haven't understood what is technical analysis, what is fundamental analysis, how does all of this work together, or they prioritize, technical analysis over fundamental analysis, but they don't understand that all of this has to work together. Fundamentals are the drivers of the market. They lead into market sentiment. They create market sentiment, and then market sentiment is reflected from a visual perspective onto the charts, which is what we call technical analysis. All of them work together. You have to use them all together. Right? These people, they will take any and all trades. They will hop in and just to kind of, get the feel of trading, get the feel of just opening a position. They're just going to open any and all trades. They don't have a strategy in place. They're following the herd. They're on, multiple different live streams every single day, and they're just trying to listen to what, different people are saying without really truly understanding what's the education behind that. They're going to start averaging their losing positions because they think that eventually, price is going to end up going in your direction. So they want to dollar cost average this. It does not work like that in the foreign exchange market. What you need to be prioritizing is the quality of your trades over the quantity of your trades. Do proper research and education. Have a mentor. If you can't afford a mentor, then there's a lot of online resources that you can go check out. You want to be following people who are actually giving out education rather than, flexing essentially. So use proper research and education and prioritize your 2 to 3 trades per day or 2 to 3 trades per week if you're a swing trader. Develop and practice a strategy over and over and over and over again until you refined it to the point where you know the ins and out of your strategy and you know exactly how to use your strategy to get in and out of a trade. Just focus on 1% equity increase a day. That's all you need to do. You have 1% equity increase a day. By the end of the week, you're going to have a 5% equity increase, which is a lot more than, majority of the people can do. You want to always be practicing, go back and journal your trades, go back and back test, use soft Forex simulator, use trading views, trading replay. There's a lot of ways to practice, right? Practice your craft and refine your craft. Another reason why a lot of people that end up, losing and they end up over trading is because they're in it for the bag, right? They're chasing the money. And now this is where the emotional trading really kicks in, where you have unfavorable financial conditions, where you are trading with money that you cannot afford to risk. I wouldn't say lose, but risk. You're more in the get rich quick. You're looking for signals instead of education. You don't really care much about, what's happening in the long haul. And that's where your emotional trading is going to start kicking in. Instead of being in it for the bag, prioritize your education over money. The chances are, if you're going to jump into a financial market, you're not just trying to be there for like 1 year and make like 20K and you're out. Once you see the 20K, you want more. That's human nature, right? People are greedy. So think of it like a long-term investment, like you would for stocks, like you would for ETFs, like you would for, real estate investment, like you would for anything else. So trade what you can afford to risk. I wouldn't say lose, but trade what you can afford to risk. And think long-term. Think about being in this market for the next 5 to 10 years. And this is pretty much, a lot of people jump into this for quote unquote financial freedom, right? And that to maintain that financial freedom, you're just going to continue coming back to this market if it gives you enough profits. And the way that's going to give you profits is when you start prioritizing education, when you start prioritizing understanding why is market moving a certain way. Right? Prioritizing your education over signals. There's an 80-20 rule, and I'm pretty sure that many of you may have heard of it. And what this rule is essentially that 80% of your desired outcomes are going to come from 20% of your efforts, right? And a lot of times what we end up doing is put in a lot of efforts into signals, into hopping from strategy to strategy, hopping from one live stream to another live stream with so many different ways of trading that you start to get confused. So focus in and hone in onto specifics of the financial markets, which is just education, which is finding a proper strategy, which is refining your strategy, which is staying disciplined to your trading plan, understanding your entire system in and out, understanding when to stay out of the markets and when to hop in, understanding macro management instead of micro management. So this is how you're going to stop over trading. You're going to prioritize your education, go out there and learn, everything about price action that you can. Learn about, candlestick anatomy, learn about what are top and bottom wick rejections, where they're called, why are they formed at specific levels. Go on to TradingView, open up a chart. It's a free website. You can open up a free account, open up a chart, any asset that you want to trade, and take a look at why is price making a massive bottom wick rejection on a daily time frame at this specific area. Right? Go out and learn about fundamental analysis. Take a look at, interest rates, take a look at monetary policies, take a look at how do central banks come up with these monetary policies and interest rates, what really goes into it. Take a look at CPI, labor market data, look at microeconomics, right? Because microeconomics are the ones that are going to form the macroeconomics, which is the high impact. Only risk 1 to 3% of your account size. And that's all you're going to, maximum is 3%, and 3% is like, I'm 100% confident because I've done my back testing. I've seen this trade play out like 1,000 times. So I know exactly how the setup is going to play out. That's where you come in with the 3%. Other than that, stick to 1 to 2%. Have a holistic approach. Don't prioritize one type of analysis over another, right? It's not really going to work. And that's because fundamentals, again, are the drivers of the market. They create market sentiment. Market sentiment is then visually represented through technical analysis. You need to understand fundamental analysis and technical analysis together, right? And how do they work together? And how can you use that to be an edge in the markets? A lot of people, when they are failing, 90% of traders who fail in the markets, they don't have an edge in the market. And that's because coming back to unfavorable financial conditions, coming back to the get rich quick mindset, coming back to, prioritizing signals over education. So having a holistic approach to the markets. Target that 1% equity increase per day. And eventually you're going to get to the point where your one trade is going to far exceed that 1%. And it happens. Your one trade can actually give you a 5% equity increase if you have like a 3-to-1 or a 4-to-1 risk to reward. But again, for you to get to that point, you need to understand what's happening in the markets at that time. You need to do pre-trade analysis before you hop into your trades. Only focus on those 2 to 3 trades per day, per week. And so that's how you're going to stop over trading, right? This is where a lot of your discipline is going to come in. Trading is an individual sport, essentially, where no one's sitting there with you. No one's going to be trading with you, in person. A lot of it is done online, right? Mentorship programs, a lot of them are also online. So it's an individual sport. That's why you need to hold yourself accountable. If you're someone who struggles with that, then maybe trading is not for you. And that's just a realization that you have to come to. And if you're someone who struggles with the discipline, maybe instead of scalping, hop into swing trades, something that's long-term that you can essentially set and forget.